When should you consider reducing your investment positions? Let's start by talking about the overall capital flow in the market. Typically, when analyzing broad indexes, we use key indicators to assess market trends. One of the most important indicators is the monthly moving average. If the main index falls below all three short-term moving averages, that's your signal to pay attention. It's often an ideal time to consider reducing your positions. I hope you make a note of this strategy. Now, most investors don't exclusively hold large-cap stocks like Apple or Microsoft. Many also own small and mid-cap stocks, the kind of stocks that don't have household names, but can be highly volatile or explosive movers. Here's the thing. Small-cap stocks don't necessarily move in tandem with the broader market. Sometimes the overall index seems strong, but that strength is artificially propped up by a handful of heavyweight stocks. Think big names like Apple or Tesla. Beneath the surface, many individual stocks might already be struggling. This creates a disconnect where the market index appears healthy, but individual stocks are weak. If you're wondering whether to reduce your positions, looking at the broader environment is key. For small-cap stocks, pay close attention to secondary indexes, such as the Russell 2000, which tracks small and mid-cap companies. If the small-cap index is noticeably weak, it's often a sign you should reassess your portfolio. And if that index falls below its longer-term moving averages, such as the 50-day or 200-day moving averages, that's an even stronger signal that a correction is underway. Weakness in small-cap indexes often translates to weakness in individual stocks. Keep in mind that even if the headline index, like the S&P 500, reaches new highs, your smaller stocks could still underperform. This divergence is your cue to make adjustments. If your individual stocks aren't keeping up with the broader market, it's time to cut back and reduce your exposure. Remember, identifying these trends early and acting decisively can help you protect your portfolio during periods of market weakness. Want more technical knowledge like this? Follow us and subscribe to this channel.